Hey everyone, John Henry here, and today in the market psychology video we have some really interesting stuff going on here on crude oil. Really kind of a funky day. It started out looking like it was going to be a massive runner type day, and then it just kind of dried up. So we had this bull channel working from yesterday, very wide bull channel after that dump that we had on the inventories. The inventories just hammered price lower. After they got that move out of their system, we saw a reversal to take all of it back. The buyers made it all the way back up again, kind of ridiculous. But at the end of the day, you'll notice a huge rally. Most of that move took place in the last 20-30 minutes of the day. Then we open up the very next day with a gap up and immediately sell down again. Now, one thing that I want to pay attention to is not only this bull channel here, but this is a gap higher that's attempting to break out after a massive run, and we close a bear candle that looks like that. There are going to be an immense amount of sellers that are going to sell this type of move, knowing that, 30-40% of the time, this type of candle is the high of the day. We never come back to the highs, and they're willing to put the risk on the table to try to sell that short. So they're going to drive that price lower initially. Now, the one key area that they need to see break is this bull channel, right? So sellers are definitely in this. They're looking for that move down. You can tell even when they came back to their entry point again, they entered more. So more and more and more selling pressure is trying to get into this move to drive the market lower. But then we run into a little bit of a problem. Right? We find support off of that channel. We see buyers beginning to accumulate this. That's not what that's not what the sellers want to see, but they know, hey, our entry point's getting defended, so I don't have a reason to get out yet. I really need to see the sellers close underneath this and get some continuation, right? The sellers get their close. They get a very strong close back underneath. Immediately, as soon as that candle opened, they sold that thing off as hard as they could. And then it went nowhere, right? And that's a huge red flag. They get down. They tap those lows, they trap underneath those lows and immediately turn higher. There is not a single seller on the planet that is going to hang on to this trade if it goes against that move, because they know now the probability of that staying the high of day decreases significantly. They do not want to see that type of follow-up. So in this case, sellers can exit with a small profit right there and look to reverse and go back the other direction, looking back for those highs again, because that's where it's anticipated to see if sellers still want it, they're going to start defending up there instead of trying to enter all the way down here, because down here, they're obviously not getting the move. So they trigger above that, a huge amount of buying pressure comes in, and that's doubled because not only are sellers buying out of their position, but buyers are buying into a position, seeing that as an opportunity to ride that move back up to resistance up here at the prior high of day. And that's exactly where we went. We go up to the prior high of day, and we see a massive amount of profit taking. Now, the reason I have an arrow here for a short possibility, why is this interesting here? We didn't get back to those highs, and that's the key, right? That's the big key to the entire thing. We missed the highs by like 2 or 3 ticks. So any seller who maybe was stubborn and held on to that move came right next to their stop, might as well have just kissed it on the cheek, and then it turns right back around. They're going to think, whew, dodged a bullet, right? Now we have another bear candle and I can jump right back on board of that thing, looking for at least a scalp to the moving average. And at least that way, I might be able to get out at break even on my earlier positions and get a little bit of scalp profit off of that one. So they're going to take that opportunity to get out at break even on the earlier move, and they're going to try to get a little bit of profit on that secondary move down. Now you'll notice what happened here, and I don't have any more arrows, but some really interesting stuff is going on, and we can look back at the chart in a couple days and see what happened. But nice bullish continuation again off of this area, not a surprise because they likely got out. They didn't want to hang on through that level, and it turns into a big bull move back up. Buyers will continue accumulating this low move. The sellers try to come in, huge selling candle, absolutely no follow through, more selling pressure, complete rejection from the buyers, shutting down the sell move. Buyers are in this thing heavily, and they're looking for a move up through those highs, especially with that little guy right there. So just a quick little tip of interest, and we'll come back and we'll see what happens here, but we are seeing those buyers step up to the plate, and just a phenomenal play on market psychology. We saw the sellers step up to the plate with huge sentiment, huge confidence, and all of a sudden that confidence was just ripped right out of their hands, and the buyers stepped right back in to take it away from them. So technical analysis mixed with that market psychology is a phenomenal 1-2 punch to give you some gorgeous moves on the day. So hopefully you learned something. Hopefully you found it interesting, and we'll see you next time.